Welcome to our podcast, where strategy meets scrutiny and freedom goes head to head with structure. There's a lot of mythology around global freedom. The entrepreneur who never pays taxes, the nomad with four passports and zero obligations, the sovereign individual plan Bs stacked like poker chips. But here's the thing, freedom without structure is like a strategy without a map. I'm Alban Jerome, venture builder, global operator, and yes, someone who's planted more than a few flags and help others to do the same.
And I am Akshay Bhandari. I run the numbers behind those flags. And I am here to tell you if the structure doesn't hold up under regulatory light, it's not a plan, it's a fantasy. Today, we kick off a series we have been jokingly calling Crossfires. The occasional intellectual street fight between Alban's appetite for global maneuvering and my compulsive need for compliance.
Today's episode is flag theory versus tax reality, right? Think of the spiritual duel between nomad fantasy, the nomad capital fantasy, and the CRA audit letters.
And if you have ever said the words, I'm going to open a trust in Nevis and a company in British Virgin Islands and a foundation in Liechtenstein to protect my Bitcoin holdings, you need to sit down and listen to us.
Flag theory. So let's start there. It's this idea cooked up in the mid 20th century that said sovereign individuals can plant different flags across different jurisdictions, one for residency, one for citizenship, another for banking, and so on. It sounds very sexy, very alluring. Statelessness with benefits.
Sounds like a scammer's Pinterest board.
Well, not entirely unfair, but at its core, it's about jurisdictional arbitrage, right? If you take the best of each country has to offer and avoid the worst, think about living in Dubai, banking in Switzerland, asset production in the Cook Islands, business in Singapore, citizenship in St. Kitts, right? It's a whole combination of stuff.
That's right. The problem is not the theory. The problem is that 99% of people execute it like they're in a Bond movie with a Shopify budget. For example, the crypto cowboy. Let's take this guy we met in Lisbon. Built a crypto protocol, made $20 million in a bull market, and decided it was time to live the digital sovereign dream. So, what did he do? He started with a Belize LLC, added a Panama foundation, opened bank accounts in Georgia and Kazakhstan, and picked up a second passport in Dominica. He read one he read too many Twitter threads about internationalizing everything. But here is the kicker. None of it was papered correctly. The Panama Foundation had nominee directors, but no real governance. The Belize LLC was under his personal email. He didn't file a single Form 5471 or T1135. His accounts in TD Bank got flagged for irregular transfers. You know what happened 2 years later? CRA audit triggered by foreign bank account reporting. Whistle from a banking officer. Accounts frozen. His legal counsel in 3 countries couldn't coordinate. He ended up paying north of around $1.2 million just in legal fees. And most of the flag structure had to be unwound under scrutiny. It started with a dream of freedom, but it ended in compliance purgatory.
Well, guys, what went wrong? He followed Twitter and Reddit for financial advice.
And forgot the golden rule. Every flag comes with friction. Now let's talk about the silent killer of every aggressive structure, compliance drag.
So I call this the tax thermos line. The different temperatures of water. So above the water, it's freedom, it's movement, it's digital nomad aesthetics. Below it, in the colder waters, it's transfer pricing, CFS rules, CRS reporting, FBAR regulations. Oh my God, the whole shebang of slow molasses progress.
If you are an American expat in Bali running your tech startup through a Seychelles IBC and still signing contracts under your personal name, you are not off the grid. You are on a grid you don't even understand.
So recently, we advised this Middle Eastern family with substantial holdings in hospitality and tech. They set up what they thought was a fully non-reportable trust in Channel Islands with layered corporate blockers in Cyprus and Mauritius. Looked like a fortress on paper until the His Royal Majesty's Revenue and Customs, right, and IRS jointly questioned the effective control of the corporation. Turns out the trustee was a friend of the family. The protector clause had too much discretion, and the US based cousins had beneficiary access. That triggered what we call as the FACTA and CRS flags. So within 18 months, the entire structure collapsed into compliance obligations, tax exits.
No risk analysis, no tiebreaker clauses, no independent fiduciary with audit trails, just vibes and a $3 million legal cleanup tab.
Well, let's face it, vibes don't last in court, nor do they get through a G7 compliance scan.
Yeah. And just to unpack that, when we say G7 compliance scan, we are talking about coordinated scrutiny between the top tax regimes in the world: the US, the UK, Germany, France, Canada, Italy, and Japan. These nations aren't playing solo anymore. They are sharing data with each other under CRS, FATCA, BEPS, and other frameworks. They have been built real-time dashboard and increasingly use AI to spot anomalies. If your offshore structure relies on opacity, odds are one of these government is already watching.
So, guys, the best analogy I can give you here is if you think you're hiding your treasure in a forest, the fact is there are about 7 drones with thermal imaging and radar circling above. And the scariest part is they're very quiet drones. So you won't be even aware they're there. You will be sipping coffee in Geneva thinking, okay, you've gamed the system, then bam, some compliance desk in Frankfurt flags a mismatch in your declared holdings versus your private bank records, right? And that's where all the problems will start unraveling.
Exactly, Alban. These systems are built for quiet detection and decisive correction. They don't announce themselves.
And that is why the myth doesn't hold up, right, Akshay? So it's 2025. Privacy is not dead, but it definitely requires some level of choreography. Now, if you want to stay elegant in motion, you better be aligned with the rhythm of regulators.
Choreography. I like that, Alban. But most people are doing interpretive dance while the orchestra is playing Tchaikovsky.
And that's exactly where we come. A lot of people don't realize, right? You want to move through this system like a diplomat, graceful, strategic, with immunity. You need to play it smart. You can't be a tax tourist with a brochure and zero exit strategy. So you had to think smarter, right? So Akshay, this flag theory, right? It does sound rather dashing, like something out of spy novel, right? And I think everyone's grown up loves the concept of it. But beyond the scammers Pinterest board imagery that you were talking about earlier, what is the underlying allure from what you've spoken to people? You know, under this entrepreneurial spirit that's driving them. Is it simply about avoiding the taxman, or is there like a deeper quest for true global autonomy at play at now?
I would say allure perhaps for those who romanticize tax evasion, but for serious operators, it is about strategic positioning, jurisdictional arbitrage, as you said. The problem is most get seduced by the idea of freedom without understanding the responsibility that comes with navigating complex international regulations. They see the flags waving in the breeze but forget the paperwork tethering them to reality.
The eternal dance between aspiration and application. And you, my dear Akshay, are the unflappable conductor, ensuring no one trips over regulatory wise. But indulge me for a minute. Imagine a world where these flags could be planted with seamless elegance. We're a digital nomad. today's true nomad can truly orchestrate a life across borders with minimal frictions, what would be the ideal landscape look like? I know not all landscapes are identical, but what do you think is the fundamental shifts that needs to occur for them?
Alban, in a truly frictionless world, tech systems would need a radical simplification and global coverage, a prospect as likely as finding a unicorn in Times Square. Even then, sovereignty comes with its own set of rules. While technology might streamline some aspects, the core principles of compliance, transparency, and accountability aren't going anywhere. The dream of absolute statelessness with absolute benefit is just that, a dream. My job is to ensure our clients don't make mistake it for a viable business strategy.
That's a very sobering fact, right? And when you said the unicorn, I was thinking there's a big precedence for all of this, right? Companies do this all the time. And it's important that we do this for our clients, right? A very strong dose of reality, as always. Maybe perhaps a bit less compulsive need for compliance, a bit more, I can say. But adventurous spirit and embracing the potential of these global strategies is important. After all, innovation is often born from pushing boundaries, right? Even those drawn by tax authorities.
Innovation within legal frameworks, Alban. There is a vast difference between strategic maneuvering and reckless disregard. My compulsive need, as you charmingly put it, is what keeps our clients out of those international compliance crosshairs you so eloquently described. It is the unglamorous work that underpins any sustainable global operation.
Unglamorous, yes, but undeniably vital, like a sturdy foundation upward, which in the most flamboyant skyscrapers must be built, right? So let's go into those foundations. So when you see someone waving the flag of, say, a Nevis Trust and a British Virginia company, Virgin Islands company, what are the immediate red flags? The compliance tremors that send you reaching for the legatory Richter scale.
The first thing I look for is substance. Does the does the structure have genuine economic activity and operational control, or is it merely a shell designed for tax avoidance? Nominee directors without actual power, convoluted ownership structures lacking clear purpose, and a mismatch between declared income and offshore holdings. These are all the classic indicators that the flags are purely decorative and will crumble under scrutiny.
Well, we all know decorative flags are designed to be toned down by gust of winds that comes there. Well, that's one vivid image to leave our listeners to, right? It seems as always the key lies in understanding why behind each flag, not just where. And perhaps having someone who's a seasoned navigator, right, like us, to navigate a chart through a course through these complex waters.
Get one with territorial taxation or no global tax. UAE, Monaco, or Panama. Citizenship, ideally one with a good passport but no tax implications. Portugal, Malta, Antigua. For asset protection, Cook Islands or Liechtenstein. For banking jurisdiction, I think Switzerland or Singapore for privacy and stability. And if you want to operate entity, I think Dubai or Estonia for compliance friendly, tax efficient structures.
Well, I'm going to add a sixth one. Where you can get a clean exit, right? Your exit jurisdiction matters as much as your entry jurisdiction.
So let's take an example of dual exit trap, a taxing tale of cross border complexity. Consider a scenario involving a company founder who, due to strategic or personal reasons, establishes an exit strategy which is focused on a French buyer or acquisition. However, the founder's equity stake is held within a Delaware registered corporation, a common structure for startups seeking international investment. This seemingly straightforward situation can quickly devolve into a complex tax nightmare, a prime example of the dual exit trap. Upon the French acquisition, the founder would naturally be subject to French capital gains tax on the proceeds from their share sale. However, because the shares are held in US entity, the Delaware C Corporation, which I told, the transaction also triggers US tax implications. In this specific instance, US withholding tax regulations would likely come into play, which means that a portion of the sales proceeds intended for the founder in France would be withheld by the US tax authorities or IRS. The crucial problem here is the lack of straightforward mechanism to reconcile these two distinct tax obligations efficiently. The founder faces the daunting prospect of navigating the tax laws and administrative procedures of both France and the United States. They may encounter difficulties in obtaining credits for taxes paid in one jurisdiction when filing in the other, leading to potential double taxation or significant delays and costs associated with tax advisors and legal counsel attempting to untangle the cross border tax implications. This dual exit trap highlights the critical importance of proactive tax planning, especially in international business ventures. Founders and companies with cross border elements in their structure need to carefully consider the tax implications of potentially exit scenarios in all relevant jurisdictions well in advance. I think failing to do so can result in unexpected and substantial tax burdens, eroding the value of the exit and causing significant financial and administrative headaches. A seemingly positive exit event can quickly turn into a frustrating and costly ordeal due to a failure to anticipate and plan for the complexities of international taxation.
Okay, so Akshay, we're going to go do a lightning round, or we can call it structured speed dating. I'm going to toss out a strategy. You drop the gavel, okay?
Sure.
Unfiltered, unsweetened, all right?
Right.
Um, Let me start off. First thing, citizenship by investment plus British Virgin Islands holdco plus a UAE bank.
It sounds like a Netflix doc in 6 months. It starts in a beach club in Antigua and ends with the 6 a.m. raid in Dubai. It has got all the tropes: a Maltese lawyer, a crypto wallet on a USB stick, and zero substance documentation.
You're brutal, aren't you? All right, next one. Belize Foundation owning tokenized IP.
I think this is cool until the first letter from FinCEN arrives. That foundation better have real governance and arm's length valuations. Otherwise, it's a ticking time bomb wrapped in a tropical branding.
Okay, so this one's a bit controversial. Next one, okay. Renounce your US citizenship so you can avoid global taxation.
Wow. If your balance sheet justifies it and you are emotionally ready to go off the American entitlement train, maybe. But I hope you weren't counting on Social Security, a blue passport, or guilt free Thanksgiving invites. Alban, would you ever build a trust in Nevis?
Sure, absolutely. But I wouldn't just build it, right? I would stage it like an offshore Broadway production, ironclad trust deeds, firewall provisions, protector with no funny business, backup jurisdictions. You just don't walk into an Avis with a PDF template and a crypto wallet, right? That's basically how people end up with a bench warrant and no legal oxygen.
Here is the hard truth, guys. Flag theory is not dead, but it is grown up. What used to be a rebel philosophy with a Panamanian PO box and a pseudonym on a blog now needs a compliance department, legal reviews, and quarterly board minutes.
So, guys, to be honest, the 2025 version of global structuring is a hybrid beast. It's bold, it's adventurous, It also wears body armor. So you need to have a battle plan that looks like it came from an elite strategy office, right? An accountant who reads footnotes like they are Shakespearean strategy. Because let's face it, they have to be that great.
because they usually are.
That is true, right? I mean, like you said earlier, it's about choreography, not camouflage. You don't disappear, you dance between the lines of jurisdiction. And if you do it right, you are a sovereign citizen with style. If you do it wrong, you're an Instagram nomad about to be extradited, right? Tactical framework for listeners, right? Don't chase zero tax, chase predictability tax. Predictability is freedom in disguise. One aggressive jurisdiction needs to compliant once balanced out. Think portfolio theory with countries. Always model the exit before you incorporate. The way out determines the value. Governance always beats gimmicks, right? Your structure is only as strong as your emotional drives for all matter. Humans, as always, are not going to be black and white, and as much as Bandari would like to go off registers and dark hard facts, right? They're emotional triggers and drives that do all of us.
That last point, I think auditors smell arrogance faster than fraud.
That is such a nice way to put it, right? My dad used to be an auditor, and that's very true. Because the most elegant structures in the world, they are not. If you are the weak link in your decision making structure.
Guys, thanks for tuning into Crossfire. We hope you now understand why that five flag TikTok is not a roadmap, it's a liability.
And if you want to move your life offshore, or you live in a jurisdiction where you don't have long term residency, right? You need to have an Akshay in your corner. Otherwise, just don't. So till we meet again, see you all next time. Do follow us on LinkedIn, subscribe us on our podcast channels, and if you're a founder or a family office that needs tailored strategy, reach out to us on LinkedIn.